We've got also a flattening relative strength of Europe versus the S&P, and in the last 2 days, some decline.
Good morning, Bruno.
Good morning, Kias.
So how are you viewing the sell-off of US equity?
Well, looking at daily charts, it obviously looks a little bit dramatic, the move that we got yesterday. But we noticed two things. Number one, here we are already oversold on a daily basis, and we are below the clouds. So we are extending the correction which started in August, September. And the question is it the beginning of the correction, of a new correction, or is it just the end and the paroxysm of the whole correction finishing very soon?
So will the S&P break the MA 200 and will it start a bear market?
Well, here we have on a daily basis the moving average 200 days. We see it also on a weekly basis with more distance here, which is a 40 weeks moving average. And when this is, it is rising. So to enter in a new bear market, if you wish, we would need to have the moving average 40 weeks moving down. That's far from being the case. And also we are close with this rising moving average 40 weeks and a rising lower band, close to an area of support around the vicinity of 2080, 2060. Also, we notice that not only on the daily basis, but on a weekly basis, it's very oversold. So it's really open, and it could rebound.
So how can you be so optimistic in a time like this?
Well, it's the choice to be a little bit contrarian. That means that here already on the VIX and VXV, which is the fear index at 3 months, if you wish, we already made a big spike and a steep rise from 16 to 20%. And also we noticed that the ratio of the VIX, which is the fear at 1 month, compared to the fear in 3 months, VXV that we have here, this ratio is already reaching a level of 1, which is the place where it signaled when it was already a top for the VXV in the past. So that means that if the fear is too high, or excessive yesterday, then we have a chance for a rebound.
So can the US markets turn around the European markets?
Well, it creates a little bit of uncertainty, and we noticed that in the sense that in the last 2 weeks, we've got also a flattening relative strength of Europe versus the S&P, and in the last 2 days, some decline. But it's still above the uptrend, so it remains in an uptrend. What happened on the Euro Stoxx itself? It has retraced almost the 2/3 of the last rise, and it's pulling back on a logical area of support, which is the former descending trend line here. As well, the daily stochastic is very oversold, and here we are close to the cloud. So all of these elements tend to sustain the case of a rebound coming in a few days.
So has the US affected Japan in any way?
We see that, in fact, it has affected this morning only. The decline from these levels to the 38% FIBO around 1734 is just a minor decline. It remains well above the clouds and well above the moving average 20 days, which is moving up. So we can say that probably Japan is going to continue to outperform the S&P.
So are emerging markets not more sensitive?
Well, they are. We noticed here, take the example of Brazil, which is relatively reactive. Clearly, we have broken a short-term uptrend line here. The relative strength has been plateau and it's declining a little bit versus the S&P 500. So we are in a sense where emerging markets are not automatically outperforming the S&P 500, and they are a little bit fearful of this move down recently. But again, here, it's still a higher uptrend, okay, with higher highs. And the way where it could pull back is probably the former resistances that we had in August and September. So together with already oversold situation, we have a good chance to find some support around 35.50.
Was this S&P correction caused by rising rates?
Well, most people think it was related to the political process, but I think you're right. What we notice is that already all of September, October, rates have been risen from 150 to all the way up to 187. And this is quite a lot. And we notice also it has also broken above the upper Bollinger Bands. So it signals somehow a new uptrend, or it confirms the emergence of a new uptrend. And we notice this is not just related to the US, but it has also been the case for the UK yield and the Japanese yield, as well as the bond yield. So it's a global phenomenon.
So will the 10-year US rate continue rising towards the 2% mark?
Well, this is the target a bit later on. But I think if we look at the daily charts, what we notice is we are already close to a resistance area, which is 189%, what we saw in May and June. Given the fact that we have already here overbought yield, if you wish, and some minor bearish divergence, while the rates were making a higher high, we most likely are going to stay in a trending range, which is 185, 175%. And that would probably ease a little bit some of the tension on the S&P short term.
But rising rates, they helped the US financials. Will it continue?
Well, here we see that we need to take a step back and look at the ratio of financial versus S&P. It's on a firm uptrend, clearly. And also what we've got as a pullback on the major market, on the S&P 500, has only been a minor pullback on the financials. So we can continue to expect outperformance of the financial at least. And this is certainly a nice area where to hide during this correction.
So your theme of rising commodity prices, is that over now?
Well, I think you are thinking about oil. Because oil has been pulling back a little bit from 51 to 46 and a half about. In fact, we are kind of disappointed by the fact that it has not broken through this 51 level, and which was in theory opening a target of 75. It's still taking its time. Even it is coming down to the 44 area. This is kind of limit between the bull case and the more neutral case. We would not like the oil price to go below 44. But we think, in fact, it will just now come back to the cloud and rebound later on and break later on 51. And the reason we think of that is that we already noticed that on the copper, on the metal side, we have very nicely in the last 2 weeks rebounded from the bottom of the triangle to the top of the triangle, and that could give a signal up in the future, and probably reinstate, when it breaks up and it's rising, reinstate the fact that emerging market could outperform the S&P 500. So we're not giving up on that theme yet.
Thank you, Bruno, for joining us in our studio today.
You're welcome.
And thank you at home for watching. Don't forget to subscribe to our channel to get the latest programmes from myself and Bruno. Goodbye for now.